Hi traders, Jeremy here, and I want to talk to you about impulse waves and more importantly, or more specifically, what happens after an impulse wave completes. You see, it's very common that once the impulse wave is over, for prices to revert back to that previous fourth wave extreme. So let's get into some examples here using the Dow Jones Industrial Average. Here we're taking a look at an impulse wave that started in 2016, ended at the high in October of 2018, 1, 2, 3, 4, 5, and then we've got the previous fourth wave extreme is listed right here, and you can see shortly after the high, prices did revert back to that fourth wave extreme. Let's look at another example, still using the Dow Jones Industrial, but a different degree of trend, meaning we're going to zoom out on this trend a little bit. And so here we're taking a look at an impulse wave that began in 2010, that completed at that high in 2018. So the previous fourth wave was down here near this 15,000 low. Okay. Now another thing to keep in mind when you're talking about the revisit to the previous fourth wave extreme is that sometimes it doesn't make it all the way to the fourth wave extreme. It'll enter into the territory of that fourth wave, and that's exactly what happened here with that 2020 collapse in prices, is that it didn't make it to that fourth wave extreme, but it came very close to touching the price territory of the previous fourth wave. Okay, so let's zoom out yet again. Let's take a look at a weekly chart. And a couple of things to bear in mind on a weekly chart is that, first of all, going back to that 2009 low, starting from there, we're working on a 5-wave impulse move higher. The 5th wave is not quite over, but I believe it's going to be over here very soon. And so therefore, once this starts to fall lower, I believe we are going to see a retest of that March 2020 low, because that's where that previous fourth wave is. Now, another interesting look on the Dow Jones is that going back to 1974, it's possible we can count a completed impulse wave going back to then. Okay, so we have wave 1 higher, wave 2 is the 1987 crash. Then we've got wave 3 higher that ended in 1999. So we had the Y2K crash in the stock market, and we had another run up into the 2007 high, and then we had the 2008, 2009 collapse in the market, and that was all of wave 4. Okay, and so when this wave terminates to the upside, it's possible to count it as completed 5 waves going all the way back to 1974, which means the previous fourth wave low was the 2008-2009 low all the way back down here. So it's possible that we could see, when this wave ends, prices reverting back, highly probable, to the March 2020 low, maybe even a little bit lower to this 15,000 level, but also keep your eye out for the low that we saw in 2009. Okay, little trading tip to help you out there for something to look for, whether you're looking at longer term charts or shorter term charts. This reversion back to the previous fourth wave is fairly steady, and usually what I'm looking for on a longer term chart is something you can trade. Shorter term chart, there's usually not enough movement available to profit from it, but what you would do is you would reset another order at a lower level on a shorter term chart. But that's all I have for today. I want to wish you all the best of luck in your trading, and we will talk to you soon.